I'll be talking at this level, testing 1, 2, 3. So you'll have to really adjust. Yeah. Let me put this.
Good morning and welcome to the Absa Kenya Africa Financial Markets Index 2020 launch. It's a very exciting day here at Absa Kenya as we evaluate the African continent as well as Kenya in light of COVID-19 and the turbulence that surrounds Kenya as an economy as well as Africa. Now, today we are celebrating and actually engaging in terms of launching the Absa Africa Financial Markets Index 2020. This is an index that has been published for the last 4 years. This particular year, it comes in the backdrop of COVID-19, something that has had an impact on the global economy as well as regional economies. We have a lot of engagements lined up for you. I will be able to walk you through this particular engagements as well as how you can be able to engage with us as we unpack the details of this report and articulate the case for Kenya, looking at the different rankings. First, allow me to introduce myself. My name is Mbithe Mwema. I will be your MC as well as moderator for the day. We will start off with a brief video that gives us an overview of who Absa is and also looks at the financial markets in Africa and what the opportunity portends. Let's take a look at this video.
Africa is a continent open to possibility, which comes to life when those with ambition and courage find the right partner. A partner with the tenacity to stand by them and light up a continent. With the experience and unique insights to go beyond limits, Absa Group Limited is that partner. We are synonymous with stability, transparency, and innovative thinking in financial services based on a legacy of 100 years of seamless execution across Africa. expand and grow strategy define how we are shaping our destiny as a proudly African bank, inspired by Africanacity. This is the distinctly African ability to always find ways to get things done. Africanacity is what drives us, what sets the tone for our business, and echoes across our African footprint. Our corporate and investment banking business challenges limits. We close distances, connecting people to opportunities across borders, languages, and cultures. With global connectivity and local differentiation, we operate at the core of your strategy. Our understanding of each unique environment across regulatory and market practices results in a differentiated service and experience for our broad range of clients. Backed by insights into key sectors, we turn risks into opportunities, supported by a unique set of solutions that work across your full value chain. Our clients experience a seamless partnership across Africa, with aligned delivery positioning you for success across operating environments. Because African ingenuity and tenacity go beyond limits, so do we. Our world-class service is based on skills and expertise that have been developed to put our clients first, proven by numerous high-profile deals and coveted international awards. We are brave, we are passionate, we are ready. We are independently African, and we believe in building courageous partnerships that work. When you have the bravery to imagine and the will to get things done, that's Africanacity. That's Absa. Corporate and Investment Banking.
Africanicity, that is what Absa Kenya as well as the Absa Group is all about. The Africa Financial Markets Index 2020 has been in the market for the last 4 years. Now, this particular report is looking at 6 parameters and ranking as well as evaluating the opportunity set in Africa by virtue of looking at the financial depth and development of financial markets in Africa. This is a report that has been done in partnership between Absa Group and OFMIF. They will be presenting their findings as we go on through the show. Allow me to walk you through the housekeeping rules. Now, this technology has allowed us to be able to engage in spite of COVID-19 and the wake of the affiliated restrictions that this pandemic has brought on. Because of technology, at times you could lose your connectivity. If you do, don't panic. Just log off and log back in. You will find us continuing. It's not over till we say it's over. On your screens, you have a chat box. Let us know anything that you would like to answer in as far as this report is concerned. But first and foremost, in a few minutes, we will have a poll that's running on your screens. Only 2 questions. What do you expect from today's session? If the 2 questions represent your expectations, please go ahead and pick either of the 2. If they do not present your expectations, feel free to tell us what would you expect to hear from today on the chat box. Let me walk you now through the expectations of the day and, more importantly, the key decision makers as well as policy makers who will be able to unpack this conversation and help us understand what decisions does Kenya as a country need to take or bear in mind if we are going to develop the financial markets for this country. We'll start off with setting expectations of the day and an overview of this report by the Absa Group team. Leading the team in Kenya, Mr. Jeremy Awori, who is the Managing Director of Absa Kenya, will give us a welcome and opening remarks to set the stage for the day ahead. Thereafter, we are joined by our colleagues and team members out of South Africa and out of London, using the essence of technology and leveraging on technology to be able to give you a global perspective when we are looking at Africa and looking at the financial markets. To set stage for this report, we will have Mr. Jeff Gabel, I beg your pardon. Jeff Gabel will be taking us through this particular report. Jeff Gabel is the Chief Economist at Absa Group Limited. He's also the Head of Research. This report has been done in partnership with the Official Monetary and Financial Institutions Forum. Speaking to us from this institution will be Danai Karyakapulu, who is the Director of Research at the Official Monetary and Financial Institution Forum. She'll articulate the case for Kenya. What are the rankings looking like across these 6 parameters in terms of market depth, the legislation, what has Kenya done over the last year compared to this year, and what opportunity sets are available for enhancing the development of the financial markets in the country of Kenya. Once we are done with these presentations, which will come to us virtually, we are joined by a team of panelists from the financial market sector in Kenya, the Capital Markets Authority, the Financial Sector Deepening, as well as the Nairobi Securities Exchange. All here to give us a policy and a top-level perspective in terms of this report and what considerations need to be made or are already in the pipeline in terms of enhancing the financial sector in Kenya. From the Capital Markets Authority, we will be joined by Mr. David Kanyi, who is the head of market deepening at the Capital Markets Authority. George Asante, who is the head of global markets, ARO Absa, will join us virtually, and he will be giving us the synopsis. How does Kenya rank vis-a-vis the other African countries in this particular report that have been evaluated alongside Kenya? From the Nairobi Securities Exchange, we are joined by Mr. Terence Adambesa. Terence Adambesa is the Chief Officer for Derivatives at the NSC. And last but not least, we will have Mr. Victor Kerry, who is the Senior Capital Market Specialist at FSD Africa. So you can see we have the banking sector well represented, we have research, facts and figures to be able to help you articulate the development of the financial sector in Kenya, and we have key policymakers as well as captains of industry giving us an overview of what is happening. Without further ado, we will have the poll running up for you right now as we speak, but then allow me to welcome Mr. Jeremy Awori, who is the Managing Director of Absa Bank Kenya, to give us the opening and welcome remarks to the Africa Financial Markets Index 2020 launch. Welcome, Mr. Awori.
Thank you very much, and a very good morning to everybody this morning. It is indeed my distinct honor and privilege to host this session this morning on this virtual platform. And we're really looking forward to a very interactive and insightful session as we discuss the status of our financial markets across the continent and the progress we've made over the last year since we released our last Africa Financial Markets Index report. I think has been indicated, this is the 4th year we've embarked on this journey of producing the Absa Africa Financial Markets Index report, and it provides a platform for gathering greater insights on the development of financial markets across Africa. As you all know, the 2020 Absa Africa Financial Markets Index report is being released at a time when many African countries are grappling with the economic and medical effects of COVID-19. The outlook is clearly, in certain instances, highly uncertain in many markets, and the downside risks continue and persist. But it's not all doom and gloom. Later on in our discussions, and as the AFME report projects, economic growth trends are expected on the continent. And this will form a key part of our discussions on the policy approaches that could be deployed to spur growth in the coming years. Ladies and gentlemen, Africa is where the focus of the world is right now. And as the growth and investments frontier, huge opportunities exist. With a population of approximately 1.2 billion people that is expected to rise to 2.5 billion people by 2020, a rising middle class, rising urbanization, and a labor force that is going to grow from about 706 million people to over 1 billion people in the next 10 years, Africa offers a huge opportunity and huge investment market for many businesses, one that the continent and other investors cannot afford to ignore. Thus, the index really seeks to enhance the development of the different financial markets across Africa by providing a clear measure of where various countries stand and highlight positive illustrations that can be used by peers to benchmark their own progress. It's also expected that it will reignite robust discussions amongst policymakers, government, private entities, customers, investors, and regulators. Now, various markets show promising opportunities for growth, yet investment prospects for potential investors are impeded by underdeveloped financial markets and, in some cases, harsh legal and regulatory constructions. Expanding and strengthening our financial markets therefore remains a critical pillar for the next level of the continent's economic success. We'll continue to encourage markets across the continent that are open, fair, transparent, and well regulated to maximize on the opportunities present now and in the future. To support this, we've continuously partnered with OMFIF, the Official Monetary and Financial Institutions Forum, since 2017, to develop the Financial Markets Index, which has been well received across the continent and beyond. OMFIF is an independent think tank for central banks, economic policy, public investment, and is a non-lobbying network for best practice in worldwide public-private sector exchanges. The index, released annually, provides 23 countries with insights and tools across 6 metrics to improve the state of their financial markets, making them more attractive to investors, and giving investors useful insights for doing business across the continent. The index also gives us an opportunity to demonstrate to our stakeholders across the world that we maintain our commitment to the African continent and show our ambition to bringing possibilities to life, to contributing to the growth of this country and the continent as a whole, and to our people by bringing such contributions. More locally, as a key player working with industry stakeholders, led by the regulators such as the Central Bank of Kenya, the Capital Markets Authority, and the Nairobi Securities Exchange, we've been at the forefront of delivering initiatives that continue to transform our capital market space. For instance, one of the areas we have partnered with the Capital Markets Authority was to help develop and launch the 10-year Capital Markets Master Plan, which is guiding the development of our markets. In addition to this, we were the first financial institution in the region to list an exchange-traded fund, the New Gold ETF, after the NSE and the Capital Markets Authority enacted regulations allowing these new instruments. Ladies and gentlemen, as a leading African banking group, Absa is committed to further developing the prosperity of the continent and its people. We trust that the insights embodied in the index will inspire active engagement among policymakers and market participants, resulting in measurable actions that foster inclusive growth and sustainable development. Let me once again thank all of you for your participation today. I look forward to having very fruitful conversations, and I thank also the panelists for joining us as well to share their insights with us this morning. So thank you very much, Karibuni, and looking forward to our discussions this morning. Thank you.
Thank you very much, Mr. Jeremy Awori, the Managing Director for Absa Bank Kenya, articulating the essence and, more importantly, the importance of this particular report. It's a report that helps policymakers enhance their decision-making matrices because of the indices and the methodology that has been used to reference different and evaluate different African markets to be able to assess who's doing better and who's not doing as well to be able to improve. So thank you very much for that, Mr. Jeremy Awori. Now we will get into the crux of this particular presentation. This presentation is the Africa Financial Markets Index 2020, and it is an evaluation of 26 African countries across different parameters. If you are not able to engage with us at this point in time, please feel free to also know that this particular engagement is running on the Absa Kenya YouTube page. So you can be able to go on the Absa Kenya page and find it there, or you could be able to just share the link with your colleagues to be able to participate and engage with us today as we celebrate and engage on the launch of the Africa Financial Markets Index 2020. This index has been done in partnership with the Official Monetary and Financial Institutions Forum. So we will have a synopsis of this particular report of MIF representatives sitting out of London. We will be joined virtually by Mr. Jeff Gabel, who is the head of research and the chief economist at Absa Group. He'll take us through his presentation. Once Mr. Gabel is done, we will be joined by Danae Kariakapalu, who is the director of research of the Official Monetary and Financial Institutions Forum. Over to you, Jeff.
Thank you very much for that introduction, and thank you everyone for allowing me the opportunity to speak today. You'll see that I'm not from the same room as our Kenyan colleagues, but here from the study in my house, where I have been sat under near lockdown since the middle of March. So every year, my trips to Nairobi are amongst the highlights, no more so than this year, where really the opportunity not only to see each of you in person, but to be able to take the pleasure of a run through the Karura forest or an evening drink at the Alchemist. These are sorely missed, and I really look forward to when we can join one another face to face again. So earlier this month, we had the global launch for the Absa Africa Financial Markets Index on the sidelines of the IMF and World Bank's. Two was fortunate. We had joining us on the day the Deputy Governor of the Central Bank of Kenya, we had the Governor of the Bank of Mauritius, we had the Financial Council, International Monetary Fund, the Vice President and Treasurer of the IFC, the Head of Private Sector Development at the UN. So really a very powerful panel to sort of describe why the index was so important to Africa. And today we get the opportunity to take those broad messages and really narrow it down to the Kenyan community. And so in that space, first I want to take a step back and say, Absa Africa Financial Markets Index, this isn't an index about where the highest financial return has been over the last year or is likely to be over the next year. It's not where the biggest need for capital is. It's not about which country in some sense is most deserving. It's not about global competitiveness. It's not about the ease of doing business. It's not about political transparency or social progress. All of those things are vital. Let me be clear. All of those things are vital to its success. But our starting point, sort of our contribution to the broader Africa development and growth story is through the African Financial Markets Index, is that effective financial market development can best ensure that Africa is well placed to attract global capital. And we know how important that is for our development, but also through effective financial market development, that Africa can best encourage the effective use of its own domestic savings, its own domestic financial assets as well. So to do that, and Jeremy touched upon that, African regulators, policymakers, the securities exchanges, the providers of capital and the users of capital are all really best served by a financial market ecosystem that is characterized by openness, by transparency, and our strong conviction in that, as we're all focused right now on the deterioration of the environment in 2020, whether it be in Kenya or in East Africa more broadly, whether it be in sub-Saharan Africa or the continent as a whole, we're focused very much on moving from the ravages of the financial market development is really critical in helping to ensure that the continent gets access to the capital that it needs to really ensure a better life for all Africans. So you've heard already, as partners in this exercise, to go and get data so you can compare countries, so we can generate discussions, so that we can learn from one another as we seek to develop these open and transparent and accessible markets. And so to encourage that discussion, 4 years ago, we launched the African Financial Markets Index. We did so in Nairobi in each of the last 17 countries back in 2017. This year, as you've heard, we got 23, the entire continent, but we got 2/3 of the population under coverage. And it isn't the case that we did that by only including the big countries. Countries like Seychelles, countries like Rwanda, Botswana, Namibia, or in Malawi. We cover about 80% of the continent's GDP with these 23 countries. So we've got a pretty good handle, I think, on what's going on out there. And there's been some really exciting developments in the last 12 months. We can move to the first slide, please. Then around those developments, I won't have the time to highlight all of them here. But as that slide comes up, and if the moderator might just move to the first content slide, please, the one with the text on it. As we await that, I'll highlighting in that space is some of the really exciting developments that we've seen across the continent over the last 12 or slightly more than that months. So part of that is around financial inclusion in making exchanges more accessible, not just to the largest fund managers domestically and globally, but right down into the retail space as well. So for example, we know that in Eswatini, they've launched a new automated trading platform that includes sort of mobile access for retail investors. We know that in Nairobi, with the Securities Exchange, there's been a revamped mobile application, again, to help encourage retail investors into that market. We know just a little bit to the south that Dar es Salaam is looking to introduce sort of similar innovation. More broadly, markets are looking to promote capital market development through encouraging more funds domestic locally. We see that through, derivatives trading in Nigeria. We see that in Ethiopia as the country's moving closer to the launch of their stock exchange, and even in smaller countries like Lesotho, where over the last year or so, legislation's been introduced that will really encourage pension fund managers there to keep more of their assets locally. We can move forward to the next page, please. We've also in this year's critical aspects around sort of sustainable finance. So it's not included in a formal scoring yet, but if we think about openness, traceability, if we think about sort of generating the markets for Africa today that will really boost sort of the continent's potential going forward, this focus on sustainable financial markets is really very, very important. So for example, green bonds, Kenya's no stranger to that, having 2019, and we know beyond green bonds just how successful the infrastructure bonds have been, both with international investors and with domestic investors. Nigeria is set to launch its third green bond over the next period. Egypt was the first in the Middle East and North Africa with a green bond this year. With a focus on the sort of the COVID crisis, you also hear lots of discussion around the world about issuing financial instruments designed specifically to provide financing for either fighting the pandemic, so funding healthcare initiatives, for example, or helping to pull economies out of the malaise that they're in right now. Well, that discussion was happening globally. Again, I just might ask that the slide be moved forward one. Well, that discussion was happening globally. The African Development Bank has already in March issued sort of a set of, or a tranche of 3-year coronavirus bonds. So really Africa at the forefront of developments in global finance. And elsewhere on this slide, we're focusing on new vehicles for green growth, where often we have countries that are participating with global initiatives to help sort of secure financing for green initiatives. And so there's an awful lot in sustainable finance going on. But let's move to of the index now. And so if I could ask that the slide be moved one more time. So here, sort of the focus largely, and often on these reports, is on the headline details, all right? So where do we rank as a country? And I know that there are lots of regional sort of comparisons as well. So in Kenya, we're going to want to know not only how the country compared against Nigeria, in South Africa, the other regional heavyweights across the continent, but against Uganda, Tanzania, and others. So let's get the headlines out of the way here. So first of all, for the 2020 index, South Africa has retained top spot, notwithstanding sort of the stiff economic headwinds it faces. Mauritius has maintained second place this year, having first achieved second last year. Nigeria is one of the big movers, moving up to third place from sixth the year before. Ghana, Morocco, and Seychelles are four countries that I think really deserve a shout out for having improved their scores. Quite highlight here just the broader improvements that we're seeing. So back in 2017, when we first launched this with 17 countries, only 6, so barely more than a third of the countries in the index at that point managed to score 50 points out of a possible 100. So managed to score at the midway of the index. With the launch of the 2020 publication this month, we've of course expanded coverage to 23, but 14 of the countries have managed to score more than 50 points now. So we're getting to the point where it's more than 60% of the countries scoring in the top half of the index, where only 4 short years ago, it was barely a third of the countries. So progress on that side. Of course, for Kenya, and I'm sure you've picked this up on the table, Kenya this year finishes in 7th place. The country has slipped 4 places from where we were in the 29 index, and the scoring's about 7 points lower. And naturally, that's going to raise an awful lot of questions. And so we're going to talk a little bit in general about the scoring for the last bit of my talk, to speak about Kenya more specifically. And I know these same topics are almost certainly going to be brought up in the panel discussion a little bit later as well. So let's flip the page here and just talk a little bit about how we generate the scoring. So as you might expect, and certainly as we quickly learned in 2017, as we sat down to sort of design the index, there's no clear way to measure the openness, transparency, and accessibility of Africa's financial markets. It's a pretty complicated topic. Now, in that space, though, and so we've organized the data set, we've organized all the things that we measure across 6 main themes, or what we call in the index pillars. And so Danai from OMFIF will discuss each of those pillars with specific reference to Kenya in a little bit more detail in a moment. But let me speak about them broadly. So across these 6 pillars or thematic groupings, we've captured more than 40 concepts in the index. For some of them where it's just annual data being used, that may have a data edge, the last data 2019. And so we'll see perhaps some of the deterioration that COVID has brought only in next year's version of the index. Some of the things that we measure are market statistics. And of course, market statistics move every day. And so we're able to capture in the index not data that 2019, but data that comes all the way through to June or July of this year. And so if you have the copy of the report downloaded, you'll find a detailed list of all the things that we measure on pages 38 and 39 of that report. But let me just preview this by saying that some of the things that we're measuring here are very quantitative and scaled. So for example, in the 4th of our themes, in the 4th pillar, the capacity of local investors, well, that's pretty quantitative, right? We know how many assets are under management from the city. We know either the size of we know the number of people in the country. We know the size of market. So in that space, it's pretty quantitative and scaled. Some of the measurements that we use are quantitative but discrete. So for example, in the 2nd pillar, where we talk about access to FX, in that space, we reward countries that have secondary market makers. So it's very binary. You have them or you do not. Other of the quantitative but discrete things we would measure might be around things like capital controls, where it's not just the case that either you have them or you don't, but there can be varying degrees of capital controls. And so the scoring will vary for a country across that assessment. And then some of the measurements that we make in the index are just by nature a little bit more qualitative. So for example, the index scoring in relation to legal or regulatory or market conditions. Lots of the stuff that's in the 3rd and 6th pillar, those will tend to be more qualitative. Now, broadly, the data set, we're constantly fine-tune our definitions and to improve the quality of data collection. And so for 2020, I'm really pleased to say that we have
Jeff Gabel, who's talking us through the synopsis of this particular report. We seem to have lost him, but as we await for him to come back, it's very clear that this report has 6 parameters.
So, sorry,
Jeff,
as I was saying, across the data set,
okay,
we're always looking to fine-tune our definitions and to really improve the quality of data collection. And so for 2020, I'm pleased that we've had even greater data collaboration with regulators, with central banks, with capital market authorities. And each year, we strive to do more in that space. And I'd also, for the 2020 launch of the index, also really like to, who had come on board providing data for some of the pillars and giving us great sort of directly comparable cross-country experience. I'm going to flip to the next slide here, and that's going to be the first preview of a little bit of the data that we see. And so I know the font is small here, but the great thing is that the report is downloadable. And better than that, the great thing is that all the data that you see in front of you right now is available through an interactive online database on OMFIF's website. And so on the left-hand side here, you can see the overall scores from the countries. We previewed that sort of 2 slides ago, and you can see Kenya's 7th place with 58 points. But across the individual pillars, we can see here where Kenya scores versus others. So Kenya sort of middle or top half of the range as compared to its peers. In the interactive database, you're able to go and click on any one of those pillars in Kenya's position and see within that a little bit more detail amongst the sub-indicators where Kenya scored particularly strongly and where Kenya scored a little bit less. So all of that is available sort of in a very transparent and open fashion. But I should say that just beyond the individual scoring and just beyond the headline country came in X place, the power of the report is amongst a lot of the qualitative commentary as well. So we had contributions from the report from more than 30 individuals spanning sort of C-suites around policymakers, really knowledgeable experts representing institutions across the official and private sector across the entire continent. And so in the full document, you get the sort of the insights there, and it really helps bring a greater flavor and clarity to the figures themselves. And that's really the broad reminder here that the value of the Absa Africa Financial Markets Index isn't so much in sort of the beautiful graphics that we represent. It's within the discussions that it generates. And today is a really great example of that. So my time here is come to the end. I'm very pleased to hand over to Danai from OMFIF. She's going to talk you through each of the 6 pillars in greater detail with specific to Kenya. Thank you very much.
Thank you, Jeff. Hi, everyone. It's good to be with you today. So starting with Pillar 1, we've already heard an overview from Jeff on the different pillars, but Pillar 1 is really the outcome pillar out of all the 6 ones. They work together to ensure that what we see in the results in Pillar 1 is the health of our financial markets. So we're looking at market depth in Pillar 1. So what kind of things are we measuring? We're measuring product diversity. So what types of assets are available on the different exchanges? What is the currency availability of stock exchanges products? What is the number of hedging products available, for example? We also look at the size of the market. So that is the total sovereign and corporate bonds, the market capitalization ratio to GDP. We also look at liquidity, so the turnover of equities and bonds to market capitalization and bonds outstanding. We also look at depth. So is it possible to clear government instruments denominated in local currency in international markets? Are there secondary market makers, etc.? And then we also look at the primary dealer system. So is there a system? What's the size of the repo market? And you can see here in this slide that shows the results that Kenya is ranking 5th in this pillar. It's also a pillar where we're seeing a very big inequality across the countries. So there is a very big gap between the scores of the first few countries and the rest. And Kenya is one of the countries that has a score sort of above 70. That is the first 5 countries that have that. So it's a pillar where we really see the outcome of the other pillars, and there's big gaps across the country. If we move to the next slide, you can see particularly the market depth indicator for all the countries, including Kenya. So you can see here, as Jeff was saying, this is a year where we're also seeing a little bit of the results from the COVID crisis. So this is one of the indicators where we look at the data in mid-2020, so some effect will already have been seen. And many countries, including Kenya, saw a drop in market capitalization as a share of GDP. Not very much, from 25% to 20%, but that is in line with what we're seeing in most other countries, as you can see in this chart. Seychelles was an exception. That's because of the rebranding of the exchange and a lot of efforts going into market capitalization. And we're also measuring in this pillar turnover, which has increased in the case of Kenya. If we move to the next slide, this shows the bond market statistics for the different countries. So again, here Kenya is in the top 5, so it's number 4 when we're looking at the bond market, so listed sovereign and corporate bonds, and also the turnover as a share of bonds outstanding. You can see again here, there's very big gaps between South Africa and the rest, even Egypt and Nigeria are almost close, and Ghana also in the turnover as a share of bonds outstanding. But there is very big discrepancies between what the top countries are doing and other countries are doing. So Kenya is number 4. And there's also been some innovations. We heard earlier from Jeff also about the first green bond that was issued in 2019. There is a focus area in the report looking at sustainable investment and sustainable finance development in the continent. There's also been innovations when it comes to fintech, financial inclusion, taking advantage of digital technologies to support financial markets. So for example, the Nairobi Securities Exchange released a mobile application to increase retail investor participation. And also we had the Treasury Mobile Direct that was launched by the Central Bank of Kenya to enhance retail access to government bonds. So that is making engagement with financial markets more accessible also to retail investors, which is a very important component to support the development of the markets. If we move to the next slide that presents Pillar 2, so that is the pillar that measures access to foreign exchange. So what we wanted to measure here is how easy is it for investors to put money into an economy and take it out. There's a lot of factors that determine whether an investor is going to choose to invest in a particular country. The return potential, growth opportunities is a very important one. That's what's going to pique their interest in the first place. But then if you have a very fast growing economy that doesn't have financial markets, or that doesn't have you're not sure if you're going to put your money in, if you can take it out, you're not sure if the exchange rate that you see is going to be the one that you're going to be charged, then you're going to think about it twice before putting money in. So in this pillar, we measure indicators looking at access to foreign exchange. So for example, we looked at foreign exchange liquidity. So what's the interbank foreign exchange turnover? That's again an outcome indicator. We're also looking at capital restrictions. So are there capital controls? The IMF has classifications around this that we look at. We don't decide that ourselves. And I know that for Kenya, there's also discrepancies in terms of what the IMF is saying and what the perceptions may be in the country. So we use the IMF classifications for that. There's also indicators around official exchange rate reporting. So how frequently is the exchange rate published? Is that information available to investors? A lot of what this index does is making this information available, because even though if you call different institutions in the countries, you are able to find this information, investors need to have this information really available and easily accessible, and that's what we're trying to do. And also whether there's a multiple, or a unified exchange rate. We also look at net portfolio flows to reserves. That's an indicator of vulnerability. If a country has a high level of reserves, it's able to manage portfolio flows, outflows more easily. Of course, having a high level of portfolio flows can also be positive, because it indicates that there is a lot of interest in the country, and that's an indicator that's perhaps a bit more ambiguous to interpret. But overall, we think that a low portfolio flows to reserves ratio means that there is better possibilities to protect the economy if there's sudden outflows or tendency for outflows. So here you can see Kenya is number 10. South Africa is again number 1. This is a deterioration that has happened gradually for Kenya. So last year it was number 5, and 2 years ago it was number 1. So overtaking even South Africa, it was one of the few pillars in the index 2 years ago where we had a country that was not South Africa top one of the pillars, and that was Kenya, which was number 1 in pillar 2. So it's really dropped over time. And if we move to the next slide, I can also explain partly why that is, and it is because of this ambiguous indicator, the net portfolio flows to reserves. So here you see the absolute level of reserves, excluding gold. So you can see that Kenya has quite a high level of reserves in absolute terms, $9.1 billion. And the ratio, though, has gone up quite a lot. So from 9.5% to 14.4%. And that may be because there is inflows, but also the vulnerability to outflows is important. So what we argue in the report is that a stronger position could help Kenya improve its score on this pillar. If we move to the next pillar, the next slide, sorry, you can see the ratio here, and you can see that for many countries that increased between 2018 and 2019, there were some countries where we saw a big decrease. So Ghana, Zambia, and Angola were some, and that helped them in some way do better in pillar 2. And in Kenya, the increase was not very substantial anyway, compared to, for example, where you see the big changes in Malawi's case, or the countries that I already mentioned where there is a decrease. If we move to the, that is showing pillar 3. So in pillar 3, we're looking at the market transparency, the tax, and the regulatory environment. What we want to measure there is the overall supporting infrastructure for financial markets. And this is one of the pillars where a lot of the countries do fairly well. So it has one of the highest average and median scores across the pillars. And there's also not that much inequality in terms of how the top countries are doing and the bottom countries are doing. The scores tend to be fairly good for a lot of countries. This is encouraging. It shows that the infrastructure is there, and we need time for this to translate into outcomes as well. So what does pillar 3 measure? So for example, we're looking at the financial stability regulation. So what stage of implementation are they when it comes to Basel standards for banking supervision? Are they in Basel 1, Basel 2, Basel 3? That takes some time to implement and ratify the updated regulations and be in line with international standards. We're also looking at quality of financial reporting. So what is the commitment to international accounting and reporting standards, such as IFRS? We're also looking at the tax environment. So how, what's the level of withholding taxes on interest and dividends? What's the number of tax treaties that some of these economies may have? We're looking again at information availability. So again, how easy is it for investors to have that information at their disposal? So are there fixed rates and times for market reporting? Do they publish the data on a sector and domestic ownership of domestic assets? Is that information available? We're also looking at market development. So is there a market association? How effective is it? What are the rules around protecting minority shareholders? Again, for foreign investors, that's something that's quite important because they fulfill that role in most cases. Is there a sovereign rating? How many corporate ratings are there by the 3 major ratings agencies and also local ratings agencies? So these are some of the things that we look at in pillar 3. And you can see here that Kenya is sorry, if we move to the next slide to show the, thank you, the different corporate credit ratings. So you can see here that in Kenya we have 7 corporate credit ratings by the 3 major ratings agencies. We have quite a lot more from the CGR. So we're also looking at regional ratings firms. But again, compared to countries like South Africa, Nigeria, or Mauritius that also have quite a lot of financial institutions, which credit ratings agencies tend to rate more, then that's lower down than these countries. If we move to the next pillar, sorry, the next slide, still the same pillar, we're looking at the indicator around protection of minority shareholders. So this is an indicator where Kenya actually tops all countries. So that's an indicator coming from the World Bank, which is it's a good indication of transparency. There's also it's also important for foreign investors to know that they could be highly protected when it comes to minority shareholding. And also some other things that we looked at, as I mentioned before, is the existence of a Capital Markets Association and also IFRS standards for domestic and foreign companies, where Kenya scores fairly high on both of these indicators. If we move to the next slide. So pillar 4 is looking at the capacity of local investors. So why is this important for the development of financial markets? Foreign investors also want to see that there is a local investor pool. That's important to kind of have that interaction between markets and regulatory authorities, to have that dialogue, to have investors that are going to challenge authorities, to also push for regulation, to be able to test things within the market locally, and also for foreign investors, if they want to exit the market, to know that there is a local infrastructure to absorb capital as they exit. That's also quite important indicator. So here we look particularly at pension funds, big institutional investors. What are the pension assets to domestically listed assets, accounting for market activity, and also what are the pension fund assets under management per capita. So you can see here, Kenya has quite a high level of pension assets to domestically listed assets. Overall in the index, it's number 9 in this pillar. But where it really lags is in terms of the pension fund AUM per capita. So you can see countries like Namibia, Mauritius, South Africa have fairly similar levels of pension assets to domestically listed assets, but they have a much higher per capita level of pension assets. So for Mauritius and Namibia, to an extent, that's countries with small population, but big emphasis on financial markets. And in the case of Namibia as well, there's been a big emphasis on supporting pension funds, and this has been a priority and a policy priority for the past few years, which is now bearing fruit. But Kenya, big population and relatively low level of pension fund AUM per capita. If we move to the next slide, we can see this in a bit more detail. So you can see here the AUM per capita in dollar terms. So in the case of Namibia, Mauritius, Botswana, South Africa, Seychelles, it's above 2,000. In the case of Kenya, it's just 257. So 8th highest in the index, and you can see that it really drops after Seychelles to the countries after Kenya also being fairly low, below $300 per capita of AUM. Next slide, please. So again, sorry, previous slide. Yes, so in terms of AUM as a share, pension assets as a share of listed securities, that's somewhere where Kenya is doing better. So 33% of the listed market, that's above the median in the index, which is 29%. But again, you see a big drop after Eswatini, Namibia, Mauritius to an extent, and Morocco, and then you kind of see that it really is a big gap, and Kenya is in that kind of middle block of fairly low pension assets as a share of listed securities. If we move to the next slide to present pillar 5, that shows macroeconomic opportunity. So here we don't want to just show what's the possibilities for investors to make returns, but also the transparency of macroeconomic statistics. How easy is it for investors to have that information? So yes, of course, we look at GDP growth, both the average in the past 5 years and also the 2-year forecast for to show opportunity. Of course, we show living standards, GDP per capita. We show export performance, so what's the export market share and the growth in exports in the past 5 years. But we also look at macroeconomic data standards, so how frequently are macroeconomic indicators such as GDP, inflation, and interest rate published. How often is the budget released? Is it regular? Is it available to investors? Is there transparency around the monetary policy decisions? So are the minutes of the monetary policy committees published? Are there, and we also look at debt, the debt profile of the country, how vulnerable it is in terms of debt sustainability, and also the banking sector vulnerability measured as non-performing loans. And you can see here that Kenya is number 11. So this is also a pillar where we don't see that big differences across countries, and also where we see fairly higher average scores than other pillars because of the high macroeconomic opportunity across the continent in general. But still, Kenya is number 11. You see your usual suspects in the top 5, again, South Africa, Mauritius, Botswana, Egypt also doing quite well in this pillar, particularly in terms of GDP growth. If we move to the next slide, that shows a bit more detail around pillar 5, potential and the forecast, and also the past 5 years, you see that there is a difference between the average of the past 5 years and the forecast for the next 2 years for a lot of countries challenged by the pandemic. Kenya is in the fortunate group of around half the countries, just over half the countries, that will still see positive growth in 2020, 2021. You see that for quite a lot of countries, including some of the top scorers like Mauritius, Nigeria, South Africa, there are expected recessions in 2020, 2021. So in Kenya, the forecast is for 1.8% growth this year and next, which is quite high, and it's quite a deceleration from the last 5 years where the average was 5.7%. That is encouraging when you see the global economy as a whole be quite challenged. So if we move to the next slide, here looking at living standards, again you see a fairly sharp differences between the first top 5 countries and the rest. So in Kenya, for example, GDP per capita is just under $2,000. The average for the index is $3,500. That's skewed primarily by a lot of the top countries where you have over 10,000 in the case of Seychelles and Mauritius and Botswana, South Africa, and Namibia, again around 6,000 and above. That's something that is a macroeconomic and development objective for Kenya and other countries. And if we move to the next slide. So now moving to the 6th and final pillar, this is looking at the legality and enforceability of standard financial markets master agreements. So we look at the legal framework and how investors are protected. What is the insolvency framework, for example? What are the netting and collateral positions? Are these enforced? Is there a use of financial market agreements? Is the master agreements? And Jeff also mentioned in his remarks that this year we've actually got better data for this indicator in particular. ISDA have contributed to the report in terms of the enforcement of netting positions. So you can see here Kenya is number 6, so still doing quite well. Mauritius, South Africa, Nigeria, and Zambia are in the top 5. If we move to the next slide to show a bit more detail on pillar 6, here we can see the enforceability of closeout netting, where according to ISDA Kenya, in Kenya that is not enforced, so we've classified it as such. In quite a few countries it's under consideration, so we're hoping to see some improvement in this pillar in the next editions. But it's an important legal underpinning of derivatives and repo markets, and that can promote investor confidence when investors see that it's enforced. It allows debts with a defaulting counterparty to be settled on a net basis, and that reduces systemic risk. So it's quite important that Kenya focuses on that as well, and in our conversation is that this has been highlighted as a key area for improvement. And if we move to the next slide, so here we see the resolving insolvency scores. So again, that's somewhere where Kenya does quite well. It's one of the top scores, again, as measured by the Doing Business report for the World Bank. If you remember, that was shown also in an earlier slide in terms of the protection of minority shareholders. And also encouragingly, it's one of the countries where we saw an improvement in the score between 2019 and 2020, so to 62 from 57. And that was because, according to the World Bank, Kenya made resolving insolvency easier by facilitating the continuation of the debtor's business during insolvency proceedings. So thank you very much. That's an overview of the pillars. And I'll hand over now to the panel to discuss and answer your questions around it as well. And please do download the report. There's a lot more information and detail there. And we're also available to follow up with questions and have conversations with OMPEV on the methodology and so on. We're at your disposal. Thank you.
Okay, we are back. Now we are discussing the Africa Financial Markets Index 2020 launch. This is a report that has been done in partnership with the Absa Group as well as the Official Monetary and Financial Institutions Forum. Kenya's ranking in terms of points was 58. This was slightly lower than last year. We want to be able to unpack, now that this report has evaluated Kenya alongside 16 other African countries. When we look at the 6 particular pillars, what has Kenya done right? What can we improve as a country? To help us unpack this conversation, we are joined by policy leaders in the capital markets as well as the financial sector of Kenya. I have a virtual panel as well as a physical panel. Virtually, we are joined by Mr. George Asante, who is the head of Global Markets ARO at Absa Group. With me here at the Absa Kenya head office, and of course maintaining our physical distances, we are represented by different powerhouses, different policymakers and decision makers. From where I'm seated, we have Mr. Terence Adambesa. Terence Adambesa is the Chief Officer for the derivatives market at the Nairobi Securities Exchange. Next to Mr. Terence Adambesa is David Kanyi, who is the head of market deepening at the Capital Markets Authority. We are also joined by Mr. Victor Nkeri, who is the Senior Capital Markets Specialist at FSD Africa. We invite you to engage with us because we would like to portray your questions as well as your feedback in as far as this report is concerned. If you are joining us via the GoToWebinar, there is a chat box where you can be able to put in your questions. If you're also joining us through the GoToWebinar, and in case you're having any difficulties in terms of the clarity of the picture, we welcome you to go to the Africa Kenya YouTube page or the Absa Kenya Twitter page. You can be able to follow the live stream there with better clarity, and we certainly beg your indulgence for today. So go to the Absa Kenya Twitter page, Absa Kenya YouTube page. You can follow the live engagement there. You can also feel free to give us your questions as we get into the panel discussion. We'll start with the opening remarks in light of this particular index launch. Then we can engage into the question and answer session, and we will be able to take your own questions as well. Let us start with Mr. George Asante, who joins us virtually.
We call this Africanacity.
On a break, we will be back with you shortly.
Those with ambition and courage find the right partner, a partner with the tenacity to stand by them and light up a continent. With the experience and unique insights to go beyond limits, Absa Group Limited is that partner. We are synonymous with stability, transparency, and innovative thinking in financial services, based on a legacy of 100 years of seamless execution across Africa. Our new brand and growth strategy define how we are shaping our destiny as a proudly African bank, inspired by Africanacity. This is the distinctly African ability to always find ways to get things done. Africanacity is what drives us, what sets the tone for our business, and echoes across our African footprint. Our corporate and investment banking business challenges limits. We close distances, connecting people to opportunities across borders, languages, and cultures. With global connectivity and local differentiation, we operate at the core of your strategy. Our understanding of each unique environment across regulatory and market practices results in a differentiated service and experience for our broad range of clients. Backed by insights into key sectors, we turn risks into opportunities, supported by a unique set of solutions that work across your full value chain. Our clients experience a seamless partnership across Africa, with aligned delivery positioning you for success across operating environments. Because African ingenuity and tenacity go beyond limits, so do we. Our world-class service is based on skills and expertise that have been developed to put our clients first, proven by numerous high-profile deals and coveted international awards. We are brave, we are passionate, we are ready. We are independently African, and we believe in building courageous partnerships that work. When you have the bravery to imagine and the will to get things done, that's Africanacity. That's Absa. Corporate and Investment Banking. Africa is a continent open to possibility, which comes to life when those with ambition and courage find the right partner, a partner with the tenacity to stand by them and light up a continent. With the experience and unique insights to go beyond limits, Absa Group Limited is that partner. We are synonymous with stability, transparency, and innovative thinking in financial services based on a legacy of 100 years of seamless execution across Africa. Our new brand and growth strategy define how we are shaping our destiny as a proudly African bank inspired by Africanacity. This is the distinctly African ability to always find ways to get things done. Africanacity is what drives us, what sets the tone for our business, and echoes across our African footprint. Our corporate and investment banking business challenges limits. We close distances, connecting people to opportunities across borders, languages, and cultures. With global connectivity and local differentiation, we operate at the core of your strategy. Our understanding of each unique environment across regulatory and market practices results in a differentiated service and experience for our broad range of clients. Backed by insights into key sectors, we turn risks into opportunities, supported by a unique set of solutions that work across your full value chain. Our clients experience a seamless partnership across Africa, with aligned delivery positioning you for success across operating environments. Because African ingenuity and tenacity go beyond limits, so do we. Our world-class service is based on skills and expertise that have been developed to put our clients first, proven by numerous high-profile deals and coveted international awards. We are brave, we are passionate, we are ready. We are independently African, and we believe in building courageous partnerships that work. When you have the bravery to imagine and the will to get things done, that's Africanacity. That's Absa. Corporate and Investment Banking.
There was an extensive conversation in terms of highlighting Kenya's positioning in the Africa Financial Markets Index 2020. Danae was able to take us through that. She is the Director of Research of the official Monetary and Financial Institutions Forum. Kenya got an overall score of 58, which is slightly lower than what we got last year. What has changed, and what are the key policy indicators or decisions that we need to consider in the financial markets if Kenya and Africa as a continent are going to be able to weather the storm when it comes to navigating the turbulence brought on by the onset of COVID-19? We have a panel discussion that is going to ensue. I have panelists who are joining us physically at the Absa Kenya head office as well as virtually. These are powerhouses, these are individuals who determine and are at the round tables where policy decisions are being made in as far as the financial markets for Kenya are concerned. So it's very insightful and imperative for us to hear what their take is in as far as this report is concerned and what next for Kenya to be able to navigate the post-COVID-19 era. I'll start off by introducing my panelists, then we can start off with opening remarks, then we'll have a question and answer segment and take the closing remarks. If you are joining this particular engagement via GoToWebinar, the picture might be a bit not so clear. If that's the case on your end, we encourage you to go to the Absa Kenya website or the Absa Kenya YouTube page or the Absa Kenya Twitter page. There is a live feed there that is clear. You can be able to stream this live. If you have questions, you can be able to put them up there. We will be able to take them and front them on your behalf to our panelists. Remember, that's the Absa Kenya Twitter page or Absa Kenya on YouTube to be able to follow this conversation. I'll start introducing our panelist for the day, and I will start with Mr. George Asante, who is the head of Global Markets ARO Absa. He will be joining us virtually. George, I will come back to you for your opening remarks. With me here at the Absa Kenya head office, I am joined by Mr. Terence Adambesa on my left. Terence Adambesa is the Chief Officer of the Derivatives Market at the Nairobi Securities Exchange. Next to Terence is Mr. David Kanyi, who is the head of the market deepening at Capital Markets Authority. Last but not least is Mr. Victor Nkiri, who is a senior capital market specialist at FSD Africa. So you can see we have the regulators here, we have market participants, we have the stock exchange here, and FSD Africa to be able to unpack this conversation. Gentlemen, I will start with your opening remarks. I will head off to George Asante, who is the head of global markets at ARO Absa. George, your opening remarks in as far as this particular report is concerned, and then we can take it from there. Over to you, George.
Thank you very much. And thank you to your people who are watching and listening as well for the opportunity. I think, what has been presented just now really highlights the importance of resilience within a financial market. And not surprising that that's actually the theme of this year's report generated by OMFIP with Absa's support. And it's absolutely critical that Africa's financial market become very resilient and more resilient as we go ahead, because no one knows when a crisis will come, but we know that the crisis will definitely come along the way. If you compare how the financial markets were 4 years ago when the first report was issued, and then now, you can actually see a gradual improvement across different countries in terms of markets becoming deeper and deeper, and market becoming more resilient. And we've seen concerted efforts by central bankers, by other regulators in really ensuring that when there is a crisis, there is unison in how the crisis is tackled from a financial market perspective to avoid disruption. So resilience is absolutely critical. And the key things that come up, which were reflected in the report, are really how deep and strong is your local investors in supporting and driving innovation in the financial market. Absolutely critical. The second point really that I picked out was about data integrity and credibility on a continuous basis. It's absolutely critical. If not, then there will be a lot of fake data out there that really doesn't help the pricing of assets on the market. Then my last point is about navigating this pandemic and emerging out of the pandemic stronger than we came in as the financial markets. And I believe there is a lot that market participants, regulators, and other policymakers can do together to ensure that the market actually helps Africa to emerge out of this pandemic at a faster rate and at a faster growth rate as well, which then helps in the development of the continent. So those will be my initial comments having listened to the presentations.
Thank you so much for that overview, Mr. George Asante, who is joining us virtually. Now, here in studio, I have Terence on my left. Terence Adambesa, please walk us through your initial opening remarks in as far as the Africa Financial Markets Index 2020 launch is concerned.
Thank you, Mbide, and it's great to be here with some familiar faces. The report, sort of highlights some key aspects in which we as a local industry need to look at. By and large, I think it's a good report. Has brought forth, aspects that, we have been working on over quite a bit of number of years. Of course, it's also raised some critical feedback, key towards which, we need to consider as we continue to develop the market. It doesn't necessarily talk much around the exchange environment, maybe quite a bit around the off-exchange environment. There's concerns, of course, around the issue about the size and scale of some of the markets in comparison to ourselves. And so if we put us Kenya on the same ranking, of course, it will raise concern with some, local players, and saying, we are much bigger in size on some aspects like GDP, like market capitalization and things like those. But generally, I think it's a good report. It raises some critical feedback for us to look at. And I guess part of this panel and discussion is to touch on what some of those points would be.
Thank you very much. That's Mr. Terence Adambesa, who is the Chief Officer for Derivatives at the Nairobi Securities Exchange. Next to Mr. Adambesa, we have David Kanyi, who is the Head of Market Deepening at the Capital Markets Authority of Kenya. David, what are your initial remarks when we look at this report?
Thank you, Mbithe, and happy to be here with this gentleman. I think the report comes at the backdrop of a tough time. Of course, COVID-19 has been with us, but it gives us an opportunity to regroup, rebuild, and become better. So as we read through the report, of course, we see areas of improvement. We have tracked the Absa Financial Market Index for the last 4 years, and it has helped us to sort of address areas where we think we've fell short as a country, and how, as a feedback mechanism, how that then can be instituted into policy making process. As part of the Capital Markets Master Plan, the Master Plan provides for certain trackers, and Absa Index is one of the trackers that we use just to identify areas where we think we probably have missed out in addressing, and what needs to be done within that space so that we can achieve what we want to achieve in our master plan. Now, looking at the various pillars, of course, we have seen some improvements in some of the pillars, but also we've seen some areas where we need to work a bit better, smarter. We've seen some improvements in market depth, but there's a little bit more that needs to be done, and I think my friend Terry will be talking about that at some point. And also in looking at the market transparency and the regulatory space, as a country, as a regulator, we've tried to institute robust frameworks that can withstand these kind of shocks. And the delivery of that through our legal framework has sort of cushioned us as a market to some extent. And also looking at the capacity for under Pillar 4 on local investors. I think there's some work to be done there. We need to do a bit of training for our trustees, so that we can attract some good conversations between the trustees and the fund managers. And I like the work that is being done by KEFIC, in trying to just attract these kind of conversations where we have pension funds investing in long-term infrastructure projects, and we are working very closely with those kind of institutions so that at least some of the conflicts that have been identified in the report can be addressed and in good time.
Thank you so much for that fantastic overview from the regulatory perspective. Last but not least, Mr. Kiri, Victor Kiri, who is a senior capital market specialist at FSD Africa. Victor, what is your initial remark in as far as this particular index launch is concerned?
Well, Mbithe, thank you so much for this opportunity. And I think we're very impressed with the index report that Absa has put together. Of course, as a development agency, FSD Africa is a financial markets development agency. We view the report basically as a development tracker that helps to show you the development of the financial markets across Africa, which is something very positive. And it keeps showing you year in, year out, which markets have taken a bold step forward, which markets have actually brought positive change. And I think because of all that combined in one particular report, it also acts as a demonstration to other markets of what actually is possible to do, and acts as a motivator to other markets that it is actually possible to make this kind of policy intervention. We see all market actors combined here, from your regulators. We see of course, the wholesale market, the banking industry, the fund managers, the pension funds. We see the retail market clearly spoken about. We see policy addressed and tax and all this, because all these little fragments work together to enhance and make a market more efficiency. And this speaks to how do we make markets achieve their optimal objective, which is to become efficient and to be able to move capital efficiently within the markets. So this is actually a very good report. We like the structure of it, and the different pillars, all the 6 pillars, address relevant issues in the financial markets. And yes, we think this is actually a positive tool that can be used for development.
Fantastic. Let me start with you, as now we get into the question and answer session. And if you are joining us, you can actually access this particular launch, the Africa Financial Markets Index 2020 launch by Absa Kenya. You can go to the Absa Kenya YouTube page or the Absa Kenya Twitter page. If you are joining us via GoToWebinar, in case of any technicalities, if the picture is not clear, we encourage you to go and follow the live stream. You still get the same quality of engagement, the same interaction on the YouTube page and Twitter page. As we continue, we are also keenly looking out for your questions in as far as this report is concerned. And what would you like to hear from the policymakers and the decision makers? I'll start off with Victor, and then I will be able to come back to George to give him to hear from him in as far as some of the questions we have lined up for you. So George, I hope you will be ready for us in a few. Victor, let me start with you. This year, the overall score for Kenya is 58. How does this compare? What are we doing better? What are we not doing better as a country when we are looking at the financial sector in Kenya?
Thank you, Mbithe. And it's good to be clear that Kenya might have taken a few steps back, not because we did something wrong, but basically this position was, we moved backwards in our position because of what other countries have done positively in terms of change. So if there's change that is supposed to happen in the market and there is actually no motivation to invest in that particular change, then change doesn't happen. So what we are seeing from other markets is that they actually have taken a step to motivate change in their markets. And you see countries like Ghana, countries like Uganda, taking bold steps from policy interventions, from working to open up their wholesale markets much better, and working on risk mitigations in their markets and addressing that particular issue. So they move several steps up, and Kenya, we find ourselves moving backwards, not because we did something wrong, but because we probably have not acted at the same pace of change and encouraging change as other markets have. So it's good to have that clear, that the other markets have done something positive. We see young nascent markets that have come in with numbers that are very surprising, like Eswatini. I'm still stuck to Swaziland, but slowly moving. And you can see the numbers there of their pension market, which is 3 times what is listed. But of course, their listed market is very small compared to what we have here as a country. And that puts them at a huge advantage in terms of rating of capacity of market to invest domestic market investments. So we also have to be a little bit cautious about that, and just to understand that, yes, there's still a lot we need to do, and other markets have also demonstrated to us how to take steps forward.
Okay.
Yes.
Now, you know, I have to come back with a second question,
Yes.
because you are saying the other markets have actually been slightly ahead of Kenya as a market when it comes to policy as well as the wholesale markets. Maybe you can briefly extrapolate. What has Kenya done, and what can Kenya do, or what is in the pipeline to deepen or to be able to avail similar opportunities to be able to enhance the ranking of Kenya vis-a-vis what the other African countries have done?
Yes. So one thing we've done very well as a country is enforceability. So the regulator, the capital markets regulator, our central bank, have been very good at enforceability. So what you find is that the market actors in the financial markets have been acting in a manner that is in line with the laws of the country. So that has been really good. And I think our regulators have actually received accolades for that, and voted for quite a number of years as some of the best regulators in the market. So in terms of regulation, we are good. In terms of law, yes, we've done very well, but we need a lot to improve, especially on the Insolvency Act, because this helps out on the closeout netting, which we are not there yet. I know we are working on that, because it will be able to open up other products in the market, especially the money market in the financial markets, where you have your master agreements that now become enforceable because you have an Insolvency Act that is actually able to enforce your master agreement. So that is something that we need to do. We need to improve on that. We see Uganda has already worked on that. We see Ghana has already worked on the Insolvency Act. So policy intervention from that particular angle is something we need to do. Another thing, of course, we have done very well is our local investors have been very active, especially during this COVID-19 season. And we see, especially the wholesale market, our fund managers and all that, have been participating a lot. But we also need to encourage more and improve on the structure that we have, and how do we bring in more investments into the market. So that is something we need to do. Yes.
Thank you so much for that, Victor. I'll come back to you later on when it comes to now looking at the retail market. Let's jump over to David. David, you sit at, as the head of the Capital Markets, deepening at the Capital Markets Authority. When we look at Pillar 6, it focuses on the enforceability of closeout netting locally and the adoption of the standard master agreements, something that Victor has alluded to, that we need to enhance that particular element in terms of looking at Kenya. Please give us an overview of what is Kenya's standing and what is in the pipeline. What is the Capital Markets Authority looking out for to be able to enhance this particular pillar?
So in terms of, thanks Mbide for that question, in terms of just addressing the insolvency part, because I think that has led to a bit of drying up in the corporate bonds market space. We, of course, continue to push for some amendments to the Act so that we can allow for proper ring-fencing of funds, especially that that are in conduit when it comes to investments in corporate bond space. We are working very closely with, of course, our peer regulators and the industry to address that. But looking also at the other developments that are there in the capital market, of course, we are developing or redoing our public offers listing regulations to address the growing asset classes within the fintech space. We're also looking at also reviewing the collective investment scheme regulations, so to address the new kind of funds that have been fronted to us by the market players, and also in terms of reporting, because that is very critical when it comes to the discussion on how does a CIS operate, what information do I need to get to get into the CIS space, but also in terms of regulatory flexibility. We have tried to be very accommodative to support new ideas, to support new ways of doing things. I'm sure, Mbi, that you've and my panelists have come across our sandbox, which has attracted over time about 15 new entrants, people who want to come and just try out new items, new ideas, and they're in that space for trial and eventually roll out some of those products. as a regulator, we welcome all those initiatives. But also in terms of policy, we work very closely to see how we can, push for policy incentives that support the growth of this market. We're still growing in terms of, attracting, capital, attracting new issuances, and of course, policy incentives come in very in handy to support this discussion. So we're working very closely also to have those ones in place. We've seen also, given the environment we've been in, the push for digital age, we have also allowed that space to grow. I'm sure Terry will talk about the NSE app, which has also brought in a new class of investors. We've seen the Treasury Mobile Direct, which has been highlighted in the report. Again, these are just new ways of trying to get in new investors into the market, pushing the participation of these new investors. Yeah.
All right, thank you. I'll come back to the sandbox in terms of looking at product diversity and access to these products in the capital markets in Kenya. But let me go back to the element of corporate bonds. This particular conversation today is the second series following a South Africa launch that happened a week earlier. In that discourse, there was the use case of South Korea as a country. The corporate bond market is 80% of the GDP. And there's a lot that has been happening there. There's a lot of funding that has been able to get up from the retail segment, from the private sector, through into the SMEs and into the medium businesses there and help build them. Now, I can't say that we are at the same level, but it's always interesting to look at South Korea because 20, 30 years back, we were handing them food. So it's always an interesting use case. But when we come to looking at Kenya, and Pillar 6 and the element of insolvency, and you have touched on corporate bonds, are there any regulations that need to change? Are there discussions that are ongoing to be able to ring fence this particular sector? And is there a possibility that in maybe 5 or so years, the corporate bond market could be another avenue of funding SMEs in this economy?
We don't have to wait for 5 years.
Yes.
I believe that's a conversation that is on the table. Of course, settlement finality is always critical when it comes to capital market products. Where you have investors, where they're not sure about settlement finality, of course they'll shy away from the market. And one of the areas where we try to address that is through the Insolvency Act. Once we address the critical areas on how we ring-fence those assets, then the investors will flow in. Now, we've seen, of course, Kenya is driven by the SME market, and we've looked at how do we then spur this, the SME market to also come to market and capital raise, but also looking at what are the investors looking at so that they can be able to channel their funds to these SMEs. So as a capital market, we are structuring what we call an SME fund that will come in as a guarantee to support SMEs that would want to come and capital raise through debt issuance, so that we give comfort to the investors who are lending money. So that way then we tie up the settlement finality process, we tie up the discussion on just trying to safeguard the assets and safeguard the investments by the lenders.
Okay, that's exciting. Is it something that will happen in a year or two, or what timelines would we be looking at?
Already, Mbide, we have the fund that,
okay.
I think the 63 billion fund,
yes.
And we'll be probably looking at expanding that through what we call a capital markets fund.
Okay, fantastic. Thank you so much. Terry, I can see you're itching to give us an overview of pillar number 1, but let me put a pause there. Let's go back to Mr. George Asante, who is joining us virtually. George is the head of global markets, ARO Absa. George, I'd like to get your sense. When we are looking at the Africa Financial Market Index 2020, we are looking at it on the background of COVID-19. COVID-19 has had an impact when it comes to the global as well as the regional economy. In terms of GDP growth, it has had an impact on currencies. We have seen currency depreciation across the continent, interest rates, and GDP growth in overall. From where you sit, how prepared is the continent to face turbulence that comes on the onset of COVID-19? And more specifically, how would you view Kenya from the desk that you sit and the engagements that you have with policymakers as well as institutional investors? Over to you, George.
Thank you very much for your question. I think it's an absolutely critical question. And as we said from the beginning, resilience of the financial market is very important, because without that, you have a lot of disruption in the financial market. People really cannot discover the prices of assets. And as has been highlighted, if I cannot discover the price of an asset, then I'm better off putting my money under my pillow. What we've seen from the data that has been put out in the UNFIF report has really been about African markets becoming more and more resilient and more deep. And I think what that shows us, I mean, for example, 4 years ago, there were just 6 countries in the report that had scores of over 50. Today, 14 countries have scores of over 50, okay? What that tells you is that the markets are becoming deeper. And how has this really translated into an on-the-ground practical kind of way to the person who walks on the street? One of the things you will see is that in 2008, when the crisis occurred, which crisis was actually of a lower intensity than the crisis we see now, there was an absolute dislocation of prices on the African continent. So people really didn't know where to price equities. People didn't know where to price FX. People didn't know where to price government bonds. What we saw in a lot of countries was government bond yields shooting beyond 30. And even at 30, you couldn't get a buyer. We didn't see the same thing in this time. And it basically goes to emphasize the point of a gradual development of the market, which then becomes quite important, right? So I guess the question we are asking ourselves is there going to be another crisis? I think, we go through cycles. It's going to happen, right? When it happens, are we as a continent and from a financial market perspective, are we going to show more resilience? Are we going to offer a deeper market where people who are scared of events that are going to happen tomorrow be able to put in place hedges, protecting themselves against those events? I think those are the critical questions policymakers should be asking themselves, right? How do we ensure that in the next 3 to 4 years or in the next 2 years, the price governments are paying on debt to raise funding to develop is lower than the prices they pay now? Because I can tell you that in the price that is paid by governments now, embedded in there is a massive amount of discount, just reflecting the fact that they don't have information, just reflecting the fact that there is no certainty when it comes to settlement, reflecting the fact that there is no guarantee when it comes to your ownership of asset prices. How do we solve this issue so that we can lower the cost of governments raising funds on the market, the cost of corporate raising funds on the market? And I think these are the critical issues that Africa needs to now think about and prepare for the next crisis.
Thank you so much for that, George. You're telling us there will be another crisis. It's just a matter of time. It normally happens. So then what you're effectively telling us is, for this particular crisis, we haven't seen a material mismatch when it comes to the pricing of assets, something that was the case in 2008. So my next question to you, George, is this. What then is the opportunity in this crisis? And at what point do you want to look at different asset classes? And especially when you look at Kenya, are there opportunities to focus on, especially when you're looking in light of this particular report and looking at what is happening globally and locally? Over to you, George.
So I think one of the key things to identify with Kenya, where Kenya actually does very well, is Kenya is excellent. In the context of Africa, it's excellent when it comes to cash products and the pricing of cash products. So if you go on the stock exchange, our equities price, they price on a spot basis or on a 3-day settlement basis. It's excellent, right? If you go on our bond market, the bonds price, they price on a 2 days or 3 days basis. It's excellent, it's working, right? You go on our FX market and you can get transactions done on spot basis. I think what Kenya now needs to do is to look at all these cash products and almost lift off to the next level. And the next level is about building risk management products to deepen the market and reduce the liquidity premium that exists in the market now. So today, you are restricted to do everything within 1 to 3 days. Why? Because there is no derivative market. How do we put in place the structures to actually build that derivative market? And for me, I think one of the things that the crisis actually highlights, which is also highlighted by the report, is the opportunity to take that next step of a lift off, because you already have the base, supported by a strong local investor base, as has been highlighted, and then also a very strong legal framework. And I think you posed the question as to, must it take 5 years for the legal regime to be reviewed, for example? I think that we have an excellent opportunity based on what other countries have done. So we cited Nigeria, we cited Ghana. These are countries that, based on the recommendations of the report, said, hey, guys, let's just focus on this one big thing and change it within a year. And they've been able to do it. I believe, given what the history of Kenya and your ability to transform within short periods, this is something that can be focused on, transform, do it, and then let's see how that translates into the pockets of the ordinary man, the pockets of government, in terms of people saving on assets and having funds to be able to invest in other things beyond just paying high cost of funding.
Okay. Thank you for that. One more last question that you can answer briefly, George. What's the one thing that you think Kenya can focus on and decide to change? Because you have mentioned Nigeria, you have mentioned Ghana. When you look at Kenya from your standpoint, is there something that can possibly be changed over the next 12 months so that when we get to the 2021 index, we can say, because of this, we've been able to see it translate into these benefits in Kenya? Over to you, George.
So I think that, in the financial market, there is nothing like a soft thing to do, or there is nothing like a quick win, right? But again, based on how integrated the markets can be and how the building blocks of the market needs to be structured, one of the things I believe that policymakers and participants, luckily we have a couple of them around the table today, can really focus on is building a stronger primary dealership system for government securities. I think it is absolutely critical, right? Why? Because your primary dealership system actually helps you to build a curve beyond 3 days, a curve that can go up to 40 years, a curve that can go up to 50 years. Now, that curve brings transparency to the government. And then, importantly, it actually serves as a benchmark for anybody who wants to build infrastructure, any corporate who wants to issue a paper. You talked about South Korea. How did they start? They start by solving the problem of funding and a credible funding curve, which can only be done if you put in place a strong primary dealership framework for government securities. So I think there needs to be a bigger framework of risk management, managing government debt, and out of that risk management is a cardinal issue of having a stronger primary dealership framework. Out of the primary dealership framework, we're going to get a strong repo market, a strong funding market. That funding market is going to help corporates to issue paper at a lower spread. It's going to help our derivative markets, which the exchange has actually been trying to execute for some time now. It's going to help the derivative market take off. So from my perspective, I really think that that is one thing that we together as a community in Kenya actually put our efforts on to resolve, in addition to all the others that are being done by the authorities.
Thank you very much for that, George. I like that you've also talked about debt, so I will come back to you just to hear your brief remarks on that perspective. So it was timely just to wait for Terence to take the last position in terms of the question and answer segment. Now, Terence, Pillar 1 looks at market depth. It considers the size and liquidity of financial markets as well as the products that are available. George is saying that there are opportunities for us to move to the next level when it comes to derivatives. And it's such a good thing because you are the head of the derivatives market. You have seen this product come to the market and launch. But before you talk about derivatives, start us off with an overview. Where are we standing today as the Kenyan capital markets? What has happened to the markets in terms of sentiment on the background of COVID-19?
Thanks, Bide. And George has raised good points, so we'll get back to that. Currently, of course, the index is about 22% down, just slightly above 3,100 points. Year to date, market capitalization is at about 2.1 trillion, which is slightly 8% low from 3 years ago, which was at about 2.3%. The cause of that, of course, is because of a decline in prices. Market cap to GDP, we're at about 21.5% if we use the 2.5% growth target for the GDP for this year. And generally, you know, if you look at prices, our market PE is at about 9.6 times, which is a big discount if you look at a historical look back of say 11 years. Dividend yield is at about 5%, which is also slightly higher than the historical average of 4%. So when we look at that in totality, we feel, you know, there's pockets of opportunity for discerning investors. You know, there's opportunities on the spot market, but also there's opportunities for the new products that the exchange has put out. Look at the REIT product. The REIT product is currently trading at about 5.7 shillings. You know, in 2019, they, you know, announced a distribution of about 0.75. From a return perspective, you are looking at close to 13%, yes. Right? The gold ETF, you know, that's been one of the runaway assets this year, growing by, you know, price growth by more than 30-40%. Trading on the products has grown, you know, by more than 8,000% on that product. On the derivative space, you know, the exchanges introduces products for the market. Growth. We're seeing growth in terms of volume and turnover in the products from launch. The returns, again, for the discerning investors are pretty phenomenal. For example, on the single stock, on a single stock contract on equity, on the index contract on the NSE 25, you're seeing returns of more than 200% on such contracts. Okay. So for the discerning investor, there are pockets and there's opportunities for this market. Of course, general market sentiment, the report talks about local pension participation. Exactly. While they've generally grown by leaps and bounds by you know, what they've been able to do, we still feel there's much more they should be able to do. If you look at our pension sector right now, and the wholesale market, as Victor wants to call them, I think by and large there's still price takers across these asset classes, which is a major concern for us as locals. So when you have a flight during a pandemic by the foreign players, where market participation is close to 75% foreign, yes. You need the local players to be your last resort, okay. Right? Okay. And so we would like to encourage much more participation, much more, you know, activity towards not only the you know, the core products, but also these new asset classes that have come forth. So George also talked about some of the things that we can do towards developing the market further. Yes, apart from what he's mentioned, primary dealership, which is something we have had for as long as we've been in the industry, as we sit down here. Typical of us, you know, we need to work on that, on the points as George has raised. But over and above that, you know, I have some proposals to make. One, we need to now reconsider how we come across our cash pricing and valuation for our cash, how we arrive at our end of day prices. Okay. We've been doing VWAP, full day VWAP, since, again, we found it when we joined the market. Yes. But when you look at the liquidity during the market, during the trading day, liquidity is centered between what? 11:30 to about, say, 12:30, 2:30, something. That's one thing we need to look at. Why are we pricing products full day while liquidity is just centered at certain tickets during the day? Two, we want to introduce market makers. as we try and introduce market makers day trading, it's critical for these players that, you know, they are able to, they have control over VWAP, because again, they are taking on risk positions on their book for them to provide liquidity to a market. So we need to address, we need to move VWAP either to, you know, a certain, you know, time ticket,
Okay.
or an auction based on the, you know, largest players in the market.
All right.
You know, and that moves the market forward. And then, of course, there's conversations around credit risk. Recently, we've seen the introduction of the clearing entity and SC Clear. We've seen the introduction of CDSC doing securities lending and borrowing. And all of these things work together. So one of the things that, you know, we are hearing from market players is around the credit enhancement of those two entities. You know, people want to see bigger capitalized entities that have ability to take on that risk. Okay. If not, then there should be a delegated responsibility in which people are then saying, can you delegate some of, you know, the responsibilities to entities such as your prime dealers or your custodian banks, who are then able to sort of enhance the credit? Because remember, some of the players in this market already have relationships with some of these players. They've already done credit assessments with those players, and they're happy to work with those ones. For them to participate in some of these initiatives, they need to do new credit checks, which they might not be very comfortable with. Okay. So that's part of some of the things that we need to work on towards, you know, moving the market forward.
Okay. Terence, I like what you were bringing up in terms of let's reevaluate the price points that we are showing at the end of the day. Now, Victor also spoke about the wholesale market, and in Kenya today, this market has a lot of domination by the fund managers, but then the key product that is on offer is the money market, which primarily invests in treasury bills, treasury bonds, or corporate bonds. Now, when we are looking at the pricing of the NSC, the sense is, yes, there are price limits. There's a price ceiling, there's a price floor on a day-to-day basis. Is that something that could be adjusted? Because the question is, how do people unearth value here in this particular market, especially the retail segment? And even though they're going to come through the wholesale funding cycle, there are equity funds offered by all the pension fund managers. You never hear about them because people want a place where I'm compounding my return, I'm making a return, the ease of coming in and getting out makes sense. And I think about the equity funds and the structure of that market and the NSC. Is there anything that can be done from a policy perspective or something to consider at this point?
I'm not sure if it's really a policy conversation than a market participant conversation.
So it's the lack of a product.
It's not really the lack of the product. I guess it's the lack of the service.
Right.
Your typical retail investor wants to be able to easily put money into their savings product, collective investment scheme of whatever nature. So, you know, if you know, currently, if I want to invest into a money market fund or something like that, I have to remove my money from my bank account and then deposit it into a certain player. Just the process of going to identify which player I want to use is a headache to many people. Okay. And, you know, those are questions we get even from our friends who are not in the industry. I think we need to get to the level where your current service providers are able to offer that service. Okay. And it's a painless, you know, it's seamless transaction into a CIS product. The other thing is that the same client wants a very liquid product. So, you know, if I have a cash issue, I need to take Mbithe out on a date, I should be able to quickly get onto my app on my phone.
Your phone.
Yeah.
All right.
Not Fuliza, of course. Right. And withdraw cash from my CIS, whatever, investment or something like that. And for the service provider to be able to do that, one, they would need, to have the necessary IT infrastructure for me to be able to access that. Two, they'll need to have the liquidity to be able to cash me out, right? Or to be able to go back to the market and cash out so that, you know, they can fund me. Okay. So those are some of the things that we need to work on, and they're not necessarily policy or regulatory
All right.
issues.
It's more of the market players.
Exactly.
Okay, but just touching now on the market players, and also from this conversation, it's becoming imperative that you must be able to leverage on the digital platforms.
Yeah.
Certainly, congratulations to you and the team at the Nairobi Securities Exchange. There was a relaunch of the app, and I have engaged with the app. It's much better.
Yeah.
So then how are you using this to engage with the retail investors, especially when we look at pillar number 3, which is looking at the retail engagement and access to opportunities in the financial markets? What's the interplay there? What's your role, and how do you provide that market access? Because we do know that there are different market players that are up on that particular platform.
And it goes back to the conversation where we're saying, when we go out and do investor education or talk to retail clients, they're saying, I want ease of access. I want an easy tool that I can use. And that's why, you know, the NSE put out the app, NSE put out Emakiba. On the app, we've now put out, you know, the chatbot. We've deployed the app so that, you know, the trading members can also link through the app or access the clients through the app. They can also do their own applications. And the idea is, you know, where we are going is your typical client, and COVID was a brilliant time for us to relook everything. You know, your client, typical clients right now don't want to fill forms. They want a very quick onboarding process. If you're going to take them 2 to 3 days and then give them like 10 pages of forms to fill, then we lose those clients.
All right.
And so those are the things we are encouraging market players to see. Okay, now you know you can do KYC without paperwork, right? What are some of those tools that we can use to reach out to clients?
Okay.
Over and above that, there's still, you know, the need to do investor education. And that never ends. You know, even professionals in this town struggle with, how do I open an account? How do I buy shares? You know, how do shares work? What is a share? And so investor education is something that
has to be continuous.
Exactly.
Okay, all right. I think I can be able to take one last question from everybody, and feel free to give me a rejoinder to any of the commentary. Then we'll go to the closing remarks and close this session. If you are watching us, if you are on the GoToWebinar platform, there is a chat box that you can be able to put up your questions. We can be able to view this. If you are also watching online, you can be able to access this particular report on the Absa Kenya website. That's absakenya.com. And if you would like to engage further in terms of watching this live, this particular engagement is available on Absa Kenya YouTube page, as well as Absa Kenya Twitter page. So let me come back to you, Nkiri. Now, on the access to markets by the retail investors, that's pillar number 3. What is your point? And briefly, if you have a rejoinder to any of the commentaries, please feel free to engage with us.
Thank you, good conversations we're having, and I think we've touched on quite a number of things. I think basically, if I would go back to probably the question that you raised to George, you asked him for a blue pill, and I liked his answer that we don't have one for the financial markets. There's no one single thing that you will swallow and you're good.
Yes.
So that doesn't exist. But of course, in order of priority of things that you would do to change the market, because we're strong believers of change, and we look for champions of change as FSD Africa in the markets, and we believe actually that financial markets are key to the economic development of Africa as a whole and different countries. I think one thing that will be very clear, and that is coming out of this room even as we discuss, is market infrastructure. And how do you have market infrastructure? And of course, that is linked up to pillar number 3, which is market transparency, tax, and the regulatory environment. So in terms of market infrastructure, what would I say is very key is the money markets are very key in any market. If you have a proper functioning money market, then that means, just as George says, cash can be priced correctly. May it be intraday cash or 7-day money, then your money markets are functioning well. Without a well-functioning money market, then you can neither have a primary market dealership, nor can you have a money market making infrastructure. This because they need securities that are readily available, they need cash that is readily available, and they need securities that are well priced, that you can know the price of a security by the second, I mean, if you want to know a price of a security right now, you can price it. You need to know the cost of your cash, again, as it moves during the day. And out of the money market, then the money market acts as a dipstick of the whole market. You're able to see, you're even able to project where your long-term market money will be. And with that, you're able to derive a lot of other instruments, like your derivatives, like your repos, like your that. So money market is basically a nurturing womb of the financial markets. The more well-functioning you have of a money market, the more products that you have available in that money market, the more money is able to move comfortably, the more products that innovation you get, the more players you have. As Terry has mentioned, we have fund managers in this market seated with an assets under management, AUM of 1.3 trillion Kenya shillings. And quite a sizable amount of this money sits with the interest rate products. That is your fixed income products, your treasury bills, your treasury bonds. And it could be the tune even up to 800 million of that is seated in that particular product. But what happens, the culture we are seeing is that it is held to maturity. And when you investigate further, why is there a buy to hold strategy by this particular function of the wholesale market, which is the pension funds and the fund managers? And one of the aspects is market transparency. And what does market transparency bring about in a market? When you have market transparency in a financial market, then you have correct pricing of any product. Why is that relevant? That is relevant because now you have risk mitigations that are in place in a market, whereby you are not feeling that you don't know the price or you have different prices. So at any one time, your risk is mitigated in terms of pricing. Your risk is mitigated in terms of exit of the market. You can comfortably exit regardless of size. So market transparency is very key. It makes the money markets and the financial markets generally develop very fast. Okay. So probably that is something we need to look at. Of course, there are many other aspects that I don't want to touch on right now, but like minority investor protection. I know CMA, Capital Markets Authority, is working a lot on that. They have also passed new policies on sell buyback. We have a new law that CMA has already passed. They have rules they have circulated on how that is going to happen in terms of guidelines of execution of that. But of course, you have also the tax aspect, which we've done very well in terms of removing withholding tax for new instruments such as green bonds. We had the first green bond that was issued in Kenya last year, and it was a corporate bond. And the policy has changed to allow tax-free on the withholding tax when you buy green bonds. Yes. And that is a good to encourage the investors to come in. It's a good confidence builders for the investors. But there are other aspects we probably need to look at. Probably our withholding tax might be a little bit too high, especially on the equity side. Exactly. Dividends equity is 15%, while actually a long-term bond, any bond that is 10 years and above, withholding tax is 10%. Well, this is interesting because we have two types of withholding tax on the bonds. If it is short, it attracts 15%. If it is long, the withholding tax is much less. Well, I view equities as a long-term instrument, as a long-term investment. Probably at least we should bring down the dividends withholding tax on that to 10%, yes, to match the long-term bonds. So there are quick wins we can do actually if within the next 12 months to get to a better place as Kenya, and to encourage investor confidence. And as I've said, even from a tax perspective, bringing in tax breaks for private equity. CMA has done a lot in terms of private equity. We've seen over the last 6 months, between January to July, private equity investments have jumped to 1.1 billion. This is a huge jump from where it was in last year. And of course, we are at a very small percentage, 0.1%, yes, against what RBA, the regulator, has allowed fund managers to invest, which is 10%. So we are not even at the 1 percentile stage, okay, because when you compare, we have at 1.1 billion of private equity investment vis-a-vis a 1.3 trillion AUM. we're not doing very well from that particular angle. Why is private equity and venture capital very important that probably we should consider attractive things, or rather attractive products such as tax breaks? Is because private equity primarily and venture capitals primarily invest in the small businesses. So we speak about SMEs, and the question is, how do we fuel that particular sector? We fuel it by bringing in investors. Where are these investors found? They're found in the private equity market. They're found in the venture capital market. How do we promote that market? Why? Because when you promote the private equity and the venture capitalist, then now you have companies that can come to the market to list. So you increase the queue, or you increase the probability of having more companies listing, because they are now receiving capital, because generally the whole purpose of a financial market is to bring efficiency and access to capital markets. Exactly. So it is very key for us to look at the private equity and the venture capital, because as these companies receive capital, as they grow, the investors need an exit mechanism. One of the best exit mechanisms is a stock exchange. So what will happen is you will see more companies listing, you will see more companies coming to queue, you will see environments happening like standards increasing in the country. Yes. I think we only had 7 companies which were rated in Kenya. And why is rating important? Rating is important for corporates when you're coming to market. So we're not seeing a lot of that come to market. And so we're not seeing a lot of rating because of that. And that affects us as a country, as Kenya, on the index performance. But if we could have more companies coming and growing from the ground, from private equity, from venture capitalists, then these companies will come a time where they need to come to the market, they will need to be rated, they will need to change their standards, they will need, and this will really promote development in the market. Okay. So I would say, yes, that is an area that we need
Victor,
to
we are
look at.
looking and eagerly awaiting your report with all these findings. But before I move over to Kanye from the Capital Markets Authority, allow me to ask you this. Where you sit, FSD Africa, you are looking at different countries. You're looking at Nigeria, you're looking at Kenya, you're looking at the entire continent.
Yes.
When we talk about financial inclusion in Kenya,
yes,
today we are evaluating access to credit and access to transfer or payment facilities in Kenya. The uptake of credit has done very well, largely because of the onset of digital platforms. Now we are in a space where we are talking about investments and trying to see how do we move from just being users of credit to investments, and from where you sit when you are looking at it at FSD Africa, and this report is looking at digital and looking at the retail market. Where are we? What's happening? Is there anything that's emerging there? Briefly, are there opportunities there? Then I can be able to move to David for a particular comment from the Capital Markets Authority.
Thank you, Bide. That's a good question. And I think Kenya has done very well, as you've said, in terms of financial inclusion, whereby financial services are accessible easily, especially through the digital platform. You have your mobile money, you have your mobile apps, and they've been working very efficiently. So that has really promoted financial inclusion generally in the country to a point where we've hit over 80% rating in terms of financial inclusion. That compared to many other countries in Africa, for example, Senegal, which has not yet picked up the mobile money lending, the digital platforms, your M-Pesa and all that, then you find financial inclusion sits at about 20% or 25% thereabout. Okay. So we're seeing a lot of variations in terms of that, but there's the one thing, of course, that we could do to promote investments is, I would say, I personally have a different view of how you could engage retail investors in a better way.
Okay, but you have to tell it to us briefly.
Yes,
all right,
because
thank you, Victor.
the platforms are good.
Yes.
Your Emma Kiba platforms and all that, they're good, and to bring that access. But I think in terms of financial capacity and financial understanding of the retail investors, it would be very hard to get them to a point whereby you're presenting products to them and they can be able to decide what is the best price for a particular product. It would be very hard to make them reach that place. This is the place where Capital Markets Authority calls sophisticated investors.
Sophisticated investors.
So the retail investors continue sitting in the retail, but I think the best channel for the retail investors is through the fund management, whereby you have professional financial markets experts who are investing their funds. And the question is then, how can we have the fund managers develop digital platforms that can reach the retail investors?
So that also just comes back to the market infrastructure.
Exactly.
And it really, what you're saying is, it's not more of a policy decision, it's more of a market practitioner's perspective.
Yes.
Okay, thank you so much for that, Victor. Let me come to David. We are sort of coming to the tail end of this particular conversation. So I will take this question and you can be able to answer it as well as give me your final submissions. George, I will be coming back to you. I'll speak to David, then speak to Terence, then I will come back to you virtually. So David, now when we are looking at the market today, there has been new products. We have seen all sorts of new products, share buybacks, green bonds. You're talking about the sandbox. Maybe walk us through, what does this mean for Kenya today, and what has been the uptake for this from where you stand?
Thank you, Mbithe. I think as a capital market, as I've said earlier, is that we are providing the platform for anyone who has any innovative product to come and showcase.
Okay.
And as we do that, of course, the regulatory sandbox provide a very interesting avenue where innovative products can be tried out within a controlled environment and then rolled out to mass market. We have had various platforms, from crowdfunding, something that is a new product that is emerging world over. Pesesha, as one of the companies that came through the sandbox, has rolled out, and we have had CDSC coming through the sandbox to roll out securities lending and borrowing. Okay. So the products are there, and I think we have seen and we have been challenged by the market, and we like the challenge. If you look at the Econ green bond that was just issued and dual listed in Nairobi and in London, that has also provided another avenue for a new product. We have new entries, or rather new interests within the green bond space, blue bond space, social bond space. Okay. All these addressing various attributes of, at a policy level, the Big Four agenda, either on housing, on manufacturing. And I think from where we sit as a regulator is to facilitate and provide an environment where if any issuer out there would want to come and issue a certain product, then they're able to come and do so. Okay. Now, just listening to just a small rejoinder on to what my friend Victor has said in terms of the different aspects of how you attract capital for the different facets. If you look at the business cycle, there is a startup capital, there's a growth capital, there's a mature capital. Okay. Of course, we have interactions with the PE fund at a startup level, where we, I think, in the past, just the recently passed Finance Act, we've been allowed space into oversighting the PE funds. Okay. And we have a fantastic opportunity here to leverage our expertise from both ends to see how we can facilitate this. Right. Again, these are opportunities that are there in the market, and we welcome any issue out there, anyone who has to come to market and
all right, thank you so much. We have absolutely run out on time, but I just beg for your indulgence, just for a brief comment from Terence, and especially when we talk about the Africa Exchange Linkages Project. So we are talking about Africa Financial Markets Index, Kenya, where is the position of Kenya when it comes to opportunities for retailers. NSE has been working with other exchanges. Are we going to get to a point where if Mbithe sits in Kenya, she can be able to go through the NSE and invest in Nigeria or another country? Very briefly. Thank you so much, Terence.
Thanks, Mbithe. Of course, there's a concern between your startup investor and your discerning investor, what Victor is calling. By the time we are discussing your discerning investor who now wants to trade in other markets, then projects like the Africa Linkages project now come into play. Okay. Because you have clients who now want to trade in securities that are outside Kenya. So that's part of the growth path for discerning investors. But there's still back to basics conversation. Victor has raised a good point around the money markets. What work towards that? I have my reservations around the funding of PE funds. Okay. and the entities that they're funding, we need to discuss that.
All right.
And the exit path through the exchange, that's a conversation
That's
that
an ongoing conversation.
we need to have.
Okay.
But another conversation that is key for us to have is, and we haven't mentioned here, is really around the role and responsibilities of asset owners, the trustees,
yes,
and the fund managers.
Okay.
And that's going to be critical.
That has
forward.
to be a critical conversation.
Exactly, yeah.
Gentlemen, thank you so much for your time. That was Mr. Victor Kiri, who is the Senior Capital Markets Specialist at FSD Africa. We also had David Kanyi, who is the Head of Market Deepening at Capital Markets Authority. Mr. Terence Adambesa, who is the Chief Officer for the Derivatives Market, the Nairobi Securities Exchange, and Mr. George Asante, who is the Head of Global Markets, ARO Absa. Ladies and gentlemen, this was the official launch of the Africa Financial Markets Index 2020. This was brought to you courtesy of Absa Kenya. This particular report has looked at 17 countries in Africa and ranked Kenya vis-a-vis key pertinent pillars, 6 of them. Now for this year, Kenya's overall ranking, it had 58 points. We've had a discourse from the originators of this report, which was brought to you courtesy of Absa Group and the OFMI Research Institution. Now, this report has looked at Kenya. We've had policy voices from our panelists. What needs to happen? Yes, Kenya may have fallen off a rank from this year to last year, but it's not because we missed out or we misstepped in any particular way. It's because other countries did better. What are our wins for the next 12 months? There's no blue pill. But what I have had today, I actually summarize it into the acronym SAR. Sustainability is important, inclusivity is important, resilience is important. Policymakers are listening. We have our analysts listening. So I think it's an ongoing conversation where we are getting better. There's more that can be done, but certainly a well thought out report that has been well articulated, appreciated by the market captains of industry, and something to engage as we go forward into the year. We have come to the tail end of this conversation. However, we would like to hear your commentary. Remember, at the beginning, we were asking you, what are your expectations for this poll? We were able to take that survey. Now, we have come to the tail end of this particular engagement for today. Our second poll is titled as such: did you find the Africa Financial Markets Index 2020 and today's discussion useful? This poll will be coming up to you shortly on your screens. We've come to the tail end, but we do have Mr. Anthony Kirui, who is the Director, Global Markets, Absa Kenya, with the closing remarks.
Thank you, Preeti. And thank you, everybody. Good afternoon and good morning, depending on where you're joining us from. We are excited to have had you with us in this session. As we come to the end of this session, I hope you found this very insightful. I personally found the discussions very rich. I thank the panelists who joined us today. I'd like to thank George Asante for Absa Group, Terry and Mbetsi from the NSC, David Kanyi from CMA, and Victor Nkiri from FSD Africa. Thank you very much to our panelists indeed for agreeing to join us today and sharing of the wealth of their knowledge as they dissected the report and gave us that perspective as well. I think we had a healthy deliberation over the report. I wish we had more time, but unfortunately we've come to the end of our session. It was also a great honor to be joined from Johannesburg by our group chief economist, Jeff Gable, and Dane, who actually joined us from OMFIF in London. We thank you for coming in quite early, considering the time difference. We appreciate your participation, and it was a great pleasure to have you join us, and we look forward to successive years of this report. I'd like to thank our capable MC. Thank you very much, Mbiti, for your support during the session, and indeed challenging our panelists with the series of questions that you put to them, which I'm sure kept our guests very entertained and engaged. I'd like to take this opportunity to thank my colleagues across Absa, who have also worked tirelessly over the past few days to make sure we had a great event today, and I am sure you would agree with me that it was indeed a great event. So asante sana. I would like to once again reiterate our commitment as Absa to continue to contribute to the growth and development of our capital markets. This is indeed the 4th year that we're launching this report, and it is our desire that this report continues to encourage discourse on the journey towards financial market deepening and development within our regional financial markets. I thank you all once again and wish you a great day ahead. God bless and thank you.
Tail end of this conversation. That was the Absa Kenya Africa Financial Markets Index 2020 launch. This is the end of the event. Thank you so much for your time. Good day.
COVID-19 has changed the world. But despite the challenges we face, the spirit of Africanacity is still alive. It's in the tenacity of the men and women who are still keeping us safe and keeping us going. It's in the creativity you use to find new ways to work, teach, do it all, and stay together, even if you're apart. And it's in the ingenuity of all those who are making a difference. Thank you to everyone still getting things done. Your Africanacity inspires us.